Welcome to another video on ARK Invest's The Bitcoin Monthly. This is for the month of June in 2023. This one's titled The Dawn of the ETF Era. And if this is the first time you guys have joined me in one of these videos, be sure to subscribe, be sure to like, be sure to follow me on Twitter and Threads. And I always try to put out these videos the month in which they come out. So this one came out about a week ago. And so I'm going to go ahead and break everything down for you guys. I want to talk about some of the metrics and some of my important takeaways from ARK Invest's Bitcoin Monthly Report. So as usual, we're going to go ahead and go through our sections here. We're going to start here at the market summary. And the whole idea of what's going on here is the fact that they talk about the bullish case with the 70% of circulating supply of Bitcoin being unmoved for at least 1 year. We'll dig more into that later, but they also talk about the fact that we're starting to see more institutional interest in Bitcoin, specifically with a Bitcoin spot ETF. And they also talk about the fact that the GBTC, or the Grayscale Bitcoin Trust, discount to Bitcoin's net asset value, NAV, narrowed towards a 1-year low. Now, this is kind of giving us an idea here that the market is anticipating that a Bitcoin spot ETF will eventually be approved. They also say that Bitcoin has found some strong technical support at 200-week moving average, which is an area I very closely pay attention to, and is actually much higher above it currently where it is. And then, of course, they talk about the global economy heading towards a recession. So we're going to go ahead and start here with the Bitcoin metrics. Now, all of these have been changing from report to report, but for the most part, they're all bullish except for transaction volume and time-weighted turnover. They actually went through here and went through active owners and changed this to bullish. So for now, most of these metrics are bullish in ARK's view. They also have Bitcoin cost basis as well. These all remain bullish, going through the market cost basis, or the realized price, the percent supply and profit, the short-term holder cost basis, the market returns, the realized market returns, perpetual futures basis, and expirational futures basis as well. Those are all bullish in ARK's view. And then we get into the specifics. So they talk about the 200-week moving average as being strong support for Bitcoin right now. That's at about 26,200. And the short-term holder cost basis being at about 27,465. Now, the reason why they talk about the 200-week moving average, this is something that Michael Saylor also talks about, is that 200-week moving average. Bitcoin barely spends any time below the 200-week moving average. The last year or so has been kind of an exception to the rule, but as you can see here in this green line, it barely ever goes under this level. And usually this is fairly strong support. And the reason why they talk about the short-term holder cost basis is that it's a good idea to figure out the short-term holders, people who have bought Bitcoin within the last, and people who have bought Bitcoin and held it for under about 160 odd days. That's what they're looking at here for the short-term holder cost basis, and they're trying to figure out if people who have bought it recently are in profit or they're not in profit. So right now, that level is at 27,465. That's where we could expect some support in the future. So they next talk about GBTC, Grayscale Bitcoin Trust's premium. For those of you who don't know, the GBTC is one of the best ways to get exposure on traditional markets to Bitcoin. It's a Bitcoin trust, and it tends to trade to a discount to the spot price. And now what they're saying here is that it's narrowed from -42 to -30%. And the reason for that has been because BlackRock has gone through and they've put together this application for a spot Bitcoin ETF, and that's gotten the market thinking that they actually have a shot at getting the spot ETF approved, and so the NAV has narrowed significantly because Grayscale is trying to do the exact same thing. They also want to convert their Grayscale Bitcoin Trust to a spot Bitcoin ETF. And if BlackRock can do it, that means that GBTC can also be made a spot ETF as well. So this right here, some people have looked at this as a prime arbitrage opportunity, considering it trades at a negative 30% relative to the value of the Bitcoin spot, a Bitcoin spot ETF, and this is something that we're going to be paying attention to in the future, especially if BlackRock gets that Bitcoin spot ETF approved. Next, they like to talk about the Bitcoin holdings on over-the-counter desks. Now, as a reminder, over-the-counter desks are just basically any trading that you get outside of a traditional exchange. Okay. And so what they're saying here is that it's actually the Bitcoin balance has increased 60% sequentially. And that means that institutions and large capital allocators are focused on increasingly focused on Bitcoin. So we have these increasing number of orders off the exchanges. And so that's showing that there is institutional adoption happening. Now, one thing you can notice here on the price is that they have, during the bull markets, a spike up of the OTC balance. And so that's something similar to what we're starting to see right now, as opposed to early 2022, mid 2022, when you had very little volume down here. So that is bullish in ARK's view. Next, they're going to talk about the number of Bitcoin that has not been moved for at least 1 year. They're saying 70% has not moved as part of the long-term holder supply. And again, this is for the addresses that have held Bitcoin for more than 6 months. Now, this is very bullish, I think, in my opinion as well, because when you have these long-term holders, usually it means people with a higher conviction level for Bitcoin. People that aren't just going to buy it and then immediately sell it as soon as it goes up 2 or 3 or 4 or 5%, but they're going to buy it and hold it for the long term. And as you get more people buying and holding for the long term, you have less Bitcoin on the exchanges. And as such, when there's a demand shock, you get a supply shock, and that boosts the price even higher. So they're saying that this has a holder base. They're strengthening the current holder base. And this, if you can see here on the chart, this is arranged by year, so the Bitcoin long-term holder supply has gone up to and basically an all-time high, sitting here at about 70%. Next, they like to talk about Tether versus USDC. So before they put out a report a couple of months ago that's saying that USDC was narrowing its competition with Tether, and it was taking market share away from Tether. Now they're saying that it's actually diverged in the opposite direction here in the past 6 months, and now they're starting to see USDT or Tether gain more market share from USDC. And the reason for that is they're saying that it could be a reaction to the depegging of the USDC to the dollar during the collapse of the Silicon Valley Bank back in March. And now we're starting to see USDT kind of become the dominant stablecoin in the space. Now, this is a neutral view. This isn't really a bullish view or a bearish view, because you can just replace one stablecoin with another stablecoin, and that doesn't really impact the market either way. Now, in this next section, they want to go ahead and talk about the global economy. And as I've said before, talk about the global economy is incredibly important, because people can't buy or sell crypto if they don't actually have the money. So they first start with the tightening cycle, the Fed tightening cycle, something I've talked about quite a bit. And the fact that this Fed tightening cycle has been the absolute greatest of all time. It's surged, they say here, 21-fold from the beginning of the tightening cycle to where we are right now. And they've actually they've put up the comparisons to previous times in which the Fed has raised rates. Now you can see here they're all kind of linear. They don't move up that much here. And then you go and compare that to 2022, 2023, and it shoots up almost in a parabolic sort of arch. So it's gone up and it's gone up and moved even higher, and they're expecting it to move higher from this point. Now they're also saying the fact that because the Fed has raised rates, this is creating strain in the space, and especially when it comes to regional banking and commercial real estate. That's something we saw back in March with the collapse of SVB. And they also believe that the Fed's going to over-tighten and send the economy into recession. And that seems to be the prevailing view at ARK Invest. So this is something they're saying is overly bearish. Next, they talk about the debt ceiling, and the reason why the debt ceiling is important is because as the public debt continues to climb, that also means that the servicing amount becomes higher. So the government's paying more interest on its debt, and they've issued about $850 billion in debt since the debt ceiling was raised back in May, and they're saying that this is a neutral view. Okay. Now, that being said, I'll also add the caveat: if the Fed starts lowering rates, you're going to wind up seeing a lower servicing amount as well on this debt. Next, they talk about GDI, gross domestic income, and they're comparing this to gross domestic product. So you can kind of think of this like GDP is kind of what people spend, and then gross domestic income is what they take in. Now, normally these two figures should be relatively aligned, but they're noticing a divergence from GDP and GDI. And so they're saying here that that divergence isn't normal. And normally when you see a divergence, it'll wind up correcting. And so GDP right now is high, and GDI is fairly low. In fact, it looks like it's actually negative in this case. And so they're expecting that these GDP figures are going to be revised to negative. Okay, now the reason why this is important is because 2 consecutive quarters of negative GDP, all right, so 2 consecutive quarters like in 2022 is normally referred to as a recession. So they're saying basically that you're going to wind up getting a reversion. They're gonna wind up going in and revising the numbers for GDP. It's going to be negative, and then as a result, it's going to be a technical recession. So that's what they're saying here. Now, they also talk about the manufacturing orders, which is a key component of this index, one of the indexes that the Fed conducts. This is a Fed manufacturing survey, and this is pointing towards a recession. And this has been a fairly reliable indicator. We can see here in 08 and 09 when it was very negative here, that indicated the recession. And then here in 2020, that also indicated the recession as well. And so now we're in that negative level, about negative 20. And that could potentially be a sign that a recession is coming. Now, if you guys have paid attention to the global economy and what they talk about with recession, there's been a lot of economists that are forecasting a recession. So what they're talking about right here isn't beyond the normal, and this is, I would say, basically consensus at this point that we're going to get a recession, but we will see if that winds up happening. All right, so that's the end of the ARK Bitcoin monthly report, and kind of in summation of this report, what we're starting to see is both a huge amount of hope in the market, especially when it comes to a spot ETF and what that could mean for the Bitcoin price, and a little bit of caution as well coming from the global recessionary prediction that we just talked about, and that is, it's difficult to imagine a future in which we have a recession, but then Bitcoin also does well in that case. And I really do think that we're going to wind up seeing probably a little bit of both, kind of a mix of both realities here. We're going to have a slightly bullish Bitcoin environment for the next year or so, and then it'll get better after that point. And the economy itself is going to maybe go through a rolling recession. Certain sectors are going to get hit, or it's going to be a very narrow recession. That's been my viewpoint, that we're going to wind up seeing a narrow recession, and especially in certain sectors. And that shouldn't really prevent people from adopting Bitcoin or buying Bitcoin or crypto. But I'm always open to new possibilities, especially if data comes out that shows otherwise. I always try to keep it honest with you guys, 100%, and try to keep myself intellectually honest. All right, so Let me know if you guys enjoy me going through these Bitcoin monthly reports. I like going through them because they're really interesting information and things that you can kind of take away from that, and you can monitor it later to see, how everything fits into place and how well Bitcoin's doing compared to what they're looking for. Okay, so that's all I've got for you guys today. This is Cody the Coin Raptor, and I hope to catch you guys in the next video.